As of today, my credit score is 821, which is considered to be really good. And today, I'm going to talk about the secret of building a good credit score and the mistakes that I see most people make when they're buying a home. But I've never closed first Scotia credit card that I got because the moment I do that, I actually hurt my credit length. Let's talk about 35%, which is the highest portion of your credit score is made of the fifth and the least important of all the things that makes your credit is with people whose names end in sing, core. If there's another person in the same pin code with the same last name, there's a very high chance that your credits will be mixed. And if they are a defaulter on their credit, you are also a defaulter on your credit. Now let's talk about the credit requirements that you need to buy a home. And honestly, it's nothing. Hard credit inquiries make just 10% of your credit score. So do not panic. So no one can pull your credit without your written credit consent. I want to leave you with a bonus, which is the two credit cards that I use and why I use them. As of today, my credit score is 821, which is considered to be really good. And today, I'm going to talk about the secret of building a good credit score and the mistakes that I see most people make when they're buying a home. So let's get started. So today we are going to talk about four things. Number one is we understand your credit score, what is it made of. Number two, we talk about the credit mistakes to avoid as a new immigrant, especially when you're coming in new to Canada. There are a lot of credit mistakes that we do because we don't learn about credit in our home country, which in my case was India. We'll also talk about credit requirements to buy a home. And finally, I'll give you a bonus tip of the credit cards that I use and why. Before we start the video, if you are new to the channel, my name is Navjot and I am on a mission to retire 1 million immigrants with $5 million. If you want to join the mission, all you need to do is subscribe to the channel and send it to your friends so that we can all build each other together. First, let's understand what a credit score is actually made of. Now, this graph is really colorful and a lot of information here, but I'll just break it down one by one. Let's talk about 35%, which is the highest portion of your credit score is made of the payment history. It's as simple as making timely payments and not missing a payment, not doing minimum payments, just paying your credit cards in full on time every single time, and that makes 35% of your credit score. After that, you have 30% coming from credit utilization. It says amount owed, but it's basically credit utilization. What I mean by that is if you have a credit limit of, let's say, $10,000, and if you're utilizing $6,000 every single month, so your balance is $6,000, even if you pay it off, your balance is $6,000, so you're using 60% of your entire credit that's available to you and your utilization is 60%. Now it's said that if you keep your credit utilization to under 30%, you actually improve your credit score by a lot. But there is one more secret which is not talked about a lot, and I'll talk about that in the next slide when I talk about credit mistakes, where you can actually utilize more credit. So you can actually do $6,000, $7,000 of utilization out of the $10,000 and still have your utilization to be low, or you can give the illusion of a low utilization. I'll talk about that in the next slide. The next most important thing is 15%, which is length of credit, and that's something that we cannot change. If you are new to Canada and you're 6 months into Canada, you got a credit card when you just came here, your length is 6 months. So you cannot do anything about it. It's very difficult to build a strong credit score of 800 plus when you're still new to Canada. And that's something that is not in your control. And that's okay too. However, one mistake that I see a lot of people doing is closing down their credit cards, especially their first credit card. So when I came to Canada, I opened my account in Scotia Bank and Scotia Bank gave me a credit card. Now, I don't use that credit card a lot. In fact, I have another Scotia Bank credit card. I'll talk about that in the end as well, why I got that credit card. But I've never closed my Scotia account and my first Scotia credit card that I got ever in my life, because the moment I do that, I actually hurt my credit length, because that was when my credit was established, and if I give up that credit card, all that length is actually lost, and my length will now start with the second credit card that I took, which was almost 1.5 years after. So out of the 4 years that I've spent in Canada, I lose 1.5 years if I give up my first credit card that I ever got. So never make that mistake. Never close down your credit card, especially the one that you got when you first came to Canada. The fourth most important thing is type of credit. What I mean by that is you have a credit card, that's one type of credit. Then you have a line of credit, that's another kind of credit. Then you have a car loan, that's another kind of credit. Then you have a home loan, that's another kind of credit. If you have multiple kinds of credit established with the credit bureau, your credit score actually improves a lot. Now, this is also called credit mix. Now, I won't say it's the most important thing because it's only 10% of your credit score, but it's good to have. And as you build your life in Canada, you would be accumulating all these kinds of credits as well. The fifth and the least important of all the things that makes your credit is the credit inquiries, and that actually makes just 10%. So all the hard checks that are happening on your profile, they only count towards 10% of your credit score. So when I see someone who is saying that I don't want a hard inquiry, I'm not saying that hard inquiries just for the heck of it is good. It's not, and you should totally avoid that. But when you're buying a home, when you're buying a car, and you're trying to avoid credit inquiries, that's the reason why we built our credit, and you should not be scared of that. And that's where I would highly recommend that you should not be scared of credit inquiries, hard inquiries, especially when it's important, because it hardly dents your credit and you recover it back, because technically only 10% of the credit is actually dependent on hard inquiries. So in my view, there are only three things that are the most important when it comes to credit. One is the payment history, making the payments on time. Then it's the credit utilization, which I talked about. And then there's the length of credit, and never close down your first credit card that you ever got. That said, there are a lot of credit mistakes that I see a lot of people make, and I'm very close to this because I'm a mortgage agent, and therefore I see credit all the time. And the first one that I see, apart from missing payments and everything, that's a complete no. But these are some of the other mistakes that I see. The first one is not using your credit card, which basically means that you are putting everything on your debit card. I would not recommend that. Number one, you are not building any credit in the country, and especially if you are planning to buy a home or get a car, that is required. Whether you like it or not, it will be required for you to show some kind of credit score. Secondly, if you have a credit card and if you make payments through a credit card, your transactions are secure. You are secured against fraud. You are secured against, like unauthorized transaction. And all that is also important when you are transacting, especially if you are making big transactions. The other mistake that I see on the similar lines is that you have one credit card per family. What I mean by that is, if I come with my wife Simran to Canada, I get a credit card for me and I get a secondary credit card which is still in my name for my wife as well. And that basically means that I'm just building my credit and not my wife's credit. And if she intends to be on the title of a home when buying a home, it's very important that both of you build your credits separately, and only then she'll have a non-zero credit score. And I'm saying she here because it's my example. It could be the other way around as well. Don't kill me in the comments there, but this is one mistake that I see: not utilizing your credit or not having a credit card for each person in the family. The second one is applying for too many credit cards all at once, because if those credit cards get declined, the applications get declined, you actually hit your credit score negatively. And therefore I would not recommend ever to apply for too many credit cards all at once. This is actually the reverse of the first one. That's pretty obvious, but I still thought I'll talk about that. The third one is low credit limit, not asking for an increase. Now, I'm not asking you to have multiple credit cards. You don't actually need multiple credit cards, but what you need in order to have a good utilization, which I talked about in my previous slide, 30% was credit utilization, is a very good credit limit. The one thing that I see a lot of people not doing is that if you spend 2-3 years and you're still stuck at the $1,000, $3,000, $5,000 credit limit, go to the bank and get a better credit limit. What that would allow you to do is, if you're spending $1,000 today, and you were spending $1,000 yesterday as well, but now instead of spending $1,000 out of $3,000 of credit limit that you have, you're utilizing 33% here. You are now able to utilize only $1,000 out of the 5,000 or 10,000 credit limit, which is 10 to 20% of utilization. So immediately you start impacting your credit score positively by increasing your credit limit. So my ideal is having 2 credit cards per person in order to have that credit limit so that your utilization is low. However, if you want to just keep one credit card, it's okay, as long as your credit limit on that one credit card is higher. The fourth mistake that I see is not setting auto pay and hence missing the due date. This is really common. Now, I'm not saying that this will impact your credit score massively. Yes, it will, but it will not impact to an extent that you'll not be able to get a house. I've been able to get a house, for people at 620 credit score because of this, stupid mistake that was made, and that's okay. However, just set it on auto pay. In fact, I would recommend that you make multiple payments every single month. Let's say you have a credit limit of $10,000. I told you, right? I'll tell you a secret of keeping your utilization low. So one way of doing that is that, let's say you have a credit limit of $10,000 and you used $7,000 every single month. It's just an example, right? So that's 70% utilization. Now, first of all, you should always have auto pay. If you don't want to do auto pay, make sure that you have, like a reminder in your calendar and pay your credit card bill earlier than the due date, because on the due date it actually gets reported to the credit bureau, and it only gets reported to the credit bureau once a month. And if you are not doing it on the due date, and if you are actually like just doing the payment earlier than that, before the due date, you actually don't get reported to the credit bureau as 70% utilization. You actually get reported as a 20% or a 0% utilization, because you actually paid off your credit card before the due date. Another hack to increase your credit score by reducing the credit utilization is that you make multiple payments a month. For example, again, the credit limit of $10,000, you utilize $7,000 of it, just pay off the credit card to about $3,000, so $4,000 payment made once. And then at the end of the month, when it's auto pay, or you want to make a payment as per your reminder in the calendar, you just pay off the other $3,000. And if you make multiple payments to your credit card, now this is not founded anywhere, it's just my observation, and I've heard that on a few forums, and I've heard a lot of YouTubers talk about this. If you make multiple payments to your credit card, it might impact your credit score in the positive direction, and that's another hack. But whatever you do, make sure that you are paying your payments on time, and make sure that you have auto pay on your account, because you cannot just miss a payment and reduce your credit score. The fifth one, and this is something which is really extremely common, especially with people whose names end in Singh, Kaur, and the reason is that if you do not provide a SIN number when anyone is pulling your credit, let's say you buy a car and you open a bank account and they ask for a SIN number, and because SIN number is not mandatory to give, you actually say, no, I don't want to share my SIN number, I don't feel safe. What happens is that your last name, if there's another person in the same PIN code with the same last name, there's a very high chance that your credits will be mixed with that person. And if they are a defaulter on their credit, you are also a defaulter on your credit. And therefore, I recommend people to give the SIN numbers for important transactions like your home, your car, your bank account openings, your credit card openings. I think you should always give your SIN numbers for these particular situations, because you don't want to mix up with another Navjot Singh, and that Navjot Singh might not be as credit worthy as me, and therefore the SIN number acts as a differentiator. If you are into IT, it acts like a primary key where you can actually be differentiated by any other Navjot Singh which is out there in your PIN code. Now let's talk about the credit requirements that you need to buy a home, and honestly, it's nothing. That's the only credit score that you need, 680. If you have this credit score, you'll get the best interest rates and the best products. Now, I see a lot of people obsess over credit scores, hard pulls, everything. Doesn't matter. You're as good as, if you are at 800, you're as good as someone at 680. The only time a higher credit score matters is when you are into business and you need access to line of credits. You need access to higher credit limits. And that's when higher credit scores actually make a lot of sense, and they actually help me, for instance, to get line of credits of 6 figures right now in my business. However, if you're buying a home, if you're salaried, do not obsess over it, because it doesn't matter. 680 is all you need. However, still there are 2 of these 5 mistakes that will severely impact your position on buying a house. Number 1 is not using credit card. So you don't have a credit score, you have a 0 credit score, that will impact you. Or using 1 credit card per family, but the spouse is also on the file, when you're doing a mortgage, and therefore they have a 0 credit score, and that will negatively impact your chances of getting a mortgage. And the second one, which is most important, is if you get mixed up, credit gets mixed up with someone else, and the bank will just not proceed with your mortgage if they know that your credit is mixed with someone else, especially if there's a negative impact. Plus, there are addresses in the credit report. Those addresses, if they are not yours, they'll know that it's mixed with someone else. That's something that they check, instantaneously. Sometimes the SIN number is, different. Sometimes the date of birth is different on the credit report, your credit report, and all that is something that you need to make sure you're not mixed up with before you buy a house. So therefore, when you book a call and when we are doing a pre-approval, we ask for your SIN number, and the reason why we do that is because we want to make sure that we are ahead of any mix-ups that have happened, and we are not the reason for causing that mix-up. So when someone, especially a mortgage agent or a bank, is asking for a SIN number, this is the reason why they are doing it. And most of the times, these agents and these people in the bank will actually not know why they are asking, and they'll be okay with you not giving it without explaining the reason. But if you call my team, they'll always explain you this particular reason, and to avoid any confusion and it's a hassle to change it in Equifax later. Now, obviously, there's only 680 credit score which is required, but there are certain important points that you need to know about home and credit. The first one is hard credit inquiries make just 10% of your credit score. So do not panic. It's okay to have a hard inquiry. That's the reason why you built a credit, to buy a home, to get a car, to get everything that a credit can buy. The second one is all home related credit inquiries, hard inquiries made within 45 days count as one. So if you are shopping around for different mortgages, I would not recommend doing that because it's still, a credit score and you're sending a credit file to a bank. However, if we are doing that with multiple banks, they all count as one within that 45-day period. That doesn't mean that you go to 15 different lenders and do it. I'll not recommend that at all because it negatively impacts your chances of getting a good rate with the bank, because they'll see that you are, inquiring with other banks and they'll be like, what, they're just gonna go. So it just doesn't look good optics wise, but yes, it only counts as one. The third thing is no one can pull your credit without your credit consent. I see that happening a lot. I don't know why there are licensed agents who pull credit without written consent. That's not allowed. If you report them to Equifax, they can actually lose their Equifax license. So no one can pull your credit without your written credit consent, and that's something that you should always take care of and know when you are buying. I hope this was useful. Before I close this particular video, I want to leave you with a bonus, which is the 2 credit cards that I use and why I use them. The first credit card that I use is a Scotia credit card, which is Scotia Momentum Visa Infinite card. This is something that I got about 1.5 years after coming to Canada. I had a normal Momentum card. Now I have an Infinite card. And the reason why I get this is the annual fee is about $120 per year, and I got 1 year free. There was some scheme, maybe it is there right now as well. However, I get 4% cash back on grocery and recurring payments, and that's pretty good because my grocery, because my parents live with me, it's $1,000 a month, roughly, give or take. $1,000, 4% of that is $40 per month, multiplied by 12 is $480. So only on grocery bill we are saving $480 in cash back, which more than covers for the annual fee. And then there are recurring payments. Then they 2% on gas because I fill gas as well. That's another benefit that I have, and 1% on everything else. So obviously if you're spending $9,000 and you're getting 1% every single month, it more than covers for the annual fee, and that's where I love this credit card. Plus there are certain perks. You get travel insurance, you get flight cancellation and delay insurances, you get lost baggage insurance, accidental coverage, rental car. It's not a lot, the accidental coverage, but still, it's something that you have on this one. So that's the card that I use personally. Then I also have an Amex Business Platinum card. Now I would not recommend this for anyone who is not earning, let's say, more than $150,000-$200,000 because it's a pretty expensive card, but there are certain perks to it. So the annual fee is about $799 per year. Now I got this card I think 2 years ago, and at that time there was a promo running which was $499 per year, and I don't think they have run a promo, and actually it was recurring. So even now I'm only paying $499 per year, and I love this particular card because the joining fee on this one was the joining bonus on this one was 130,000 points, which is equivalent to $1,300. So I actually more than 3 years of fee is covered actually on the joining bonus that I got, and I use this because I travel a lot. So there are travel benefits that you get. There are some random cash credits that I get. I don't even know why I get those cash credits honestly, but there are, I got $200 cash credit just a couple of days ago. There's the lounge access because I travel a lot. I need the lounge access as well. So there are certain upgrades that you can get when you are upgrading your flight. You're flying economy, you want a premium economy, you can actually use the points to upgrade it. Our Vegas trip, our California trip, the entire flight tickets were actually booked from the points that we earned in the last 2 years, and we still have about $1,000 worth of points left in the card. So it's a pretty good card if you are an avid traveler. It more than covers for the $799. I know $799 is cheap, but for me at least it's worth it because I have a lot of business expenses. One thing that I love about this card is that it has out of country medical cover as well, which is about $5 million, which is pretty good. I don't know the terms and conditions, they might not be that good. My insurance covers for out of medical cover anyways, but still it's a good to have. But the main reason why I got this credit card was, and that is probably the main reason why I have a 800 plus credit score, is there is no credit limit on this card. If you get this card, you get a $30,000 limit, and that increases with your usage. Right now, my credit limit on this one is $100,000. Across my 2 credit cards, my credit limit is $120,000. So even if I use $10,000, $12,000, $20,000, my credit utilization will never cross 20%, and that's the reason why my credit score is almost 821, not almost, but it's 821 821, and it has stayed there for a while now. Even though, I just bought a house, there was the hard inquiry, everything happened, but it's still 821. I think it was closer to 830 before I made those hard inquiries on my credit. But because 30% is the utilization, and my utilization always remains low because of the Amex card where the credit limit is $100,000, I can actually ensure all the time that my credit is over 800. Again, I don't recommend this card for everyone, but if you are someone who feels that they can afford 799 and you travel a lot, this can be a really good card for you. I'll link these credit cards in the description. If you want to check them out, you can. If you want to take it, you can, depending on your needs and what you prefer. I really love my Scotia card because it's a 4% on grocery. It just makes absolutely no sense to not take it. But yeah, if you have anything that's better that you are using, I would love to hear that, and you can just put that in the description or in the comments below, so that people can actually benefit from that. That's all I have for today. I hope you liked this video. Do share it with friends if you did. I hope I was able to explain how credit works, and you are able to get a better idea on how to build your credit and what mistakes to avoid. That's all I have for today. मिलते हैं अगली वीडियो में, तब तक के लिए बाय बाय.